Understanding Trading Violations, a guide for beginners. Hello, and welcome to our English language learning channel. Today, we're diving into the world of finance to explain a critical concept: trading violations. Whether you're a student, a professional, or just curious about financial markets, understanding this term is crucial. Let's break it down in a simple, easy-to-understand way. Trading violations occur when traders or investors break the rules set by regulatory bodies like the Securities and Exchange Commission, SEC, in the United States or similar organizations worldwide. These rules are in place to ensure fair and orderly trading and to protect investors from fraud and manipulations. There are several types of trading violations, each with its own set of rules and consequences. Let's look at some common ones. Good faith violation occurs when you sell a security bought with unsettled funds, then do not wait for the purchase to settle before making another purchase. It's like using the promise of payment to make another purchase without the initial sales proceeds actually being available. Free riding. This is buying a security without having enough funds in your account and selling it before paying for the purchase. It's akin to buying something you can't afford and trying to profit from it without ever using your own money. Wash sales. Selling a security at a loss and then repurchasing the same or substantially identical security within 30 days before or after the sale. This is often done to claim a tax deduction for the loss, which is against the rules. The consequences of trading violations can be severe. They may include fines and penalties. Financial penalties can be substantial, depending on the severity of the violation. Suspension or ban from trading. In serious cases, individuals may be temporarily or permanently banned from trading. Reputational damage. Companies and individuals can suffer reputational harm, impacting their future business and career opportunities. To avoid trading violations, it's essential to understand the rules. Make sure you're familiar with the trading regulations applicable to your country and the markets you're involved in. Use settled funds. Always trade with funds that have settled to avoid good faith and free riding violations. Keep records. Maintain accurate records of all your trades to avoid accidental wash sales. Thank you for watching our video on trading violations. Remember, the key to avoiding these violations is knowledge and caution. We hope this guide has shed some light on what trading violations are, their consequences, and how to avoid them. Stay informed, trade wisely, and see you in our next video.